Hello guys, this is Vinit from Edge-Forex, and today I want to talk about what happened in the past week. A couple of really big things happened where actually the biggest thing was the tariff that was imposed on gold coming out of Switzerland in 100-ounce bars and the kilo bars. But before we get there, let's see what to expect next week. It's a very extremely light week next week. All we are expecting is on Tuesday, there are a couple of big things happening out of US. We have CPI numbers coming out and from Australia, we have RBA monetary policy, which I don't think much surprises is expected out of there. Other than that, I don't see anything big happening with your PPI coming out on Thursday. And that's really about it. Core retail sales on Friday. But again, nothing earth-shattering that is going to move Forex markets based strictly on calendar or strictly on the numbers or economic numbers coming out. But there's a lot of other things that are happening around the Forex market, around generally economically, where that can have a big impact on Forex markets, especially around tariffs, especially tariffs on gold, because that's the talk of the town right now. No matter where you go, everybody is talking same thing, which is, hey, how this repricing of gold, in other words, how the tariffs on gold are going to impact the precious metal market in the short term, medium term, and the long term. And only thing I can say, if these tariffs stick, things are not going to be same ever again. And people who already have gold are going to benefit a lot, in my opinion, because things are not going to be same again. It's going to disrupt how gold is mined, to how gold is purified, how gold is then distributed in the marketplace, in the world around. So now, here is, I prepared a couple of slides that I wanted to go over. So I'll cover a couple of conspiracy theories that I think shouldn't be considered conspiracy. They should be considered mainstream, in my opinion. So now, what happened? So Trump came out and said there's going to be 39% tariff on all 1 kilo and 100-ounce bars coming out of Switzerland. Switzerland purifies or um, uh, takes basically raw material and purifies 70% of the world's gold. That is about 2,000 tons of gold every year, which is by far the biggest in the world. So that said, so an annual basis, Switzerland, the biggest export of Switzerland is gold. And the biggest buyer of that gold is the United States. So they buy in the tune of $61.5 billion worth of gold out of Switzerland, or gold that was actually kind of processed in Switzerland, even though it comes from England and from other sources. So now COMEX, COMEX is the exchange where all the gold, not all the gold, one of the big exchange where the gold is stored, where people buy and sell gold in volume. Like people like you and I cannot just go to COMEX and buy, because there's the minimum quantities that I guess folk like you and I cannot really afford. So they store and transact in gold that are 1 kilo and 100 ounces. So now the COMEX now is the biggest buyers and biggest transaction holders are the United States companies. So now what Trump is doing is he's targeting COMEX, he's targeting the gold coming out of Switzerland, saying that, hey, Switzerland, there's a huge trade deficit between Switzerland and the U.S., and he wants that gold to be processed in or refined in the U.S. And the panic has struck in Switzerland. Now what have done is they have stopped all shipments that are either 1 kilo or 100-ounce bars. So because of that, there's a shortage now developing in the gold market. And because of the shortage, the prices for those bars, which are the 100-ounce bars and the kilo bars, there's a premium on those of up to $150 per ounce. That's how bad the gold market is at this point. Usually, there is premium on futures. What is a future? Future is nothing but a contract to buy gold in a future date. So you have to pay a bit of a premium because of market fluctuations, and whoever is writing the contract, they need to make some money because they're the one taking the risk. So now usually there is a premium of about $20 to $30 per ounce for a future, and there's a minimum quantities of, for example, 100 ounces or 100 kilos per contract. So now all those, the premium on those futures have risen dramatically to the tune of $150 per ounce. Now, I was talking about conspiracy theory. Here is the biggest one. What US, right now, the biggest problem with the US is the debt, the external debt that US owes in to other countries and to the banks, the US Treasury, that is. So they owe about 33,000 billion or $33 trillion in US debt. So now, and they hold a little over 8,000 tons of gold. So now, if they revalue the gold from 42 on the books, the gold is still valued at $42 an ounce in the US. Okay, if they value the gold, if they reprice the gold, say from $42 to say $10,000, that gives them 2,600 billion or $2.6 trillion that they can pay towards that debt. Now you'll say that, hey, why would they want to only say pay down 10%? But that's just the beginning. It's just a step in the right direction. But what that's going to do is, yeah, can they do 20,000? Yes. But I think 20,000 or 30,000 is a little out there. I think 10,000 or 15,000 is more likely number for them to actually do it. What that is going to do is going to bring debt under 100% of GDP. Right now, it's over 100% of GDP. It's going to bring the debt down to 100% of GDP. And then what is that going to do? That is going to then increase the rating of debt rating for the United States, and it's going to bring interest rates lower in the bond market generally. See, right now, what is the biggest expense on the U.S. books? It is the interest that they pay on the U.S. on the national debt. So now, if the interest, say, and there's about $4.5 trillion, the total interest cost. So if that, say, for example, if they're on average across all the yield curve, like as in 1 year, 5 year, 10-year bonds, if they're paying on an average, say they're paying 4%. I'm just making this number. And if that comes down to say 2%, okay, 50% reduction, that itself frees up $2 trillion. Okay, guys. So now over the 10-year period, they can actually pay off their debt. So repricing the gold, it kind of sets a chain of events that can resolve in debt payment. Nobody wants to pay their debt off completely. U.S. wants to bring the debt down to more manageable, more serviceable levels. And I think 10 to 15,000 gold reprice will get them to that point. And I think that's in my opinion, knowing Trump, I think that's his end game. And if you're holding gold, you're laughing all the way. Don't sell it, hold it, add to it. Don't do anything right now. Okay, so now, okay, here it is. So what is the play here? What is he going to do? Okay, right now Trump is targeting COMEX. COMEX is in London, and all the gold that flows out of London that goes to US, 80% of it is actually refined in the refineries in Switzerland. So now what he's doing is he's disrupting that entire process. He is disrupting the entire flow of gold from London into the US. He's saying that, okay, any gold that is refined in Switzerland cannot make it into US. If it does, it has to be a 39% tariff. So instead of paying, say, $3,400 for the gold per ounce of gold, it'll now cost you $47 or even $5,000 in gold. Imagine, guys, if gold reaching $5,000, I don't want to even guess how bad the situation is going to get. So anyway, so he is now trying to encourage gold refinery to happen within the US. That's another goal that he's after. He wants to bring refinery into the US, so he doesn't have to have that kind of trade deficit or of say that huge a number with Switzerland. So that's really, I think, the two things. He wants to bring the refineries into the US, he wants to cut his debt down, and he is using the tariffs and he's disrupting the gold market based on that. And remember, Trump made this remark, I've told you guys yesterday also, that one who has gold makes the rules. That's the golden rule. And I believe he is displaying that right now as we speak. Okay, so now what are the implications on Swiss economy? Okay, so the currency is going to take a hit. We at Edge-Forex we are on our big accounts, on our not the trading accounts, on our investment account, long-term accounts. We are heavily short Swiss franc, and we have been for some time because Swiss currency has risen like anything, and it needs to reverse. So now they've refined 70% of gold. Even if that gets cut by half, that is going to take a huge, mega hit on their GDP. And GDP takes a hit, their currency will also take a hit along with that. So now refiners, they will move to countries like China, India, and even to US to circumvent tariffs. Everything is Swiss negative. So right now, the Swiss trade deficit, as I said, is $48 billion. That will also reverse. So all in all, it's very negative for Switzerland. That's why they are flying their executives over to the US to try and renegotiate and try to Trump's rear end and to see if he'll give them some relief. Okay, so now how does that affect a small investor like you and I? So I don't think I know anybody who buys kilo bars or 100-ounce bars. Like somebody like me would buy an ounce there or 2 ounces there, stuff like that. So it's really not going to affect the small investor or the small coins, but it will have a huge effect on the big guys. That said, I think smaller coins demand will also increase, and so will the premium attached to those smaller coins. That will also take a hit to the upside. So all in all, it's all good for gold. If you're in gold, be happy, keep it, add to it whenever you guys get a chance. So that said, what does US want? He wants to dominate the world market. He wants to disrupt things, and he is being aggressive. He does not care about, he's a very transactional guy. That's what he says in this art of deal. It's about that particular deal at the time and nothing else. He does not think past. He doesn't think future. It's the deal on the table that matters the most. If it resets the relationship, so be it. He does not give a rat's ass about any of that. See what he's doing to India right now. 25 years worth of relation he's spoiling based on a stupid fact that India is buying Russian oil. What is he doing? He's buying Russian fertilizer. He's buying Russian uranium. But he's mad at India for buying Russian oil. But he's okay with China to buy Russian oil. See, it doesn't make sense. He has one rule for one country, another rule for another, like a different country. And when he says China is his biggest enemy and India is one of his best friends, but he's punishing his friends. Now makes sense out of that one. Go. Anyways, so now, is this history in the making? I think so. If these tariffs stick, okay, that's a big if they stick, this is history in the making where gold will get repriced like it did in 1971 when Nixon ended the gold window and said gold is no longer going to be attached to US dollar, or US dollar is no longer going to be attached to gold at $42 an ounce. And in a matter of 10 years, gold went from 42 to 1,000. That's a 25x move in 10 years. You name me one investment that'll give you that much. Nothing other than .com or crypto. These are all manias. I'm talking investment. There's a big difference between investments and manias. So that said, now is not the time to sell gold. Now is time to take advantage of the reprice in the value of gold, because it is going to make a lot of people rich, and it is going to have such a huge wealth transfer. People that are holding fiat currencies are going to see a major adjustment downwards. People who are holding tangible assets, real assets, are going to see a major uptick, a major increase in their net worth. And that's something that I've been predicting for a very, very long time. And I think time is here, time is nigh, that it is happening in front of our own eyes. So now, again, US wants to reshape the global finance, and they're doing it, but the way they're going about it is absolutely stupid, which is fine. As an investor, as a person who wants to maintain his purchasing power or even increase his purchasing power, gold is the way to go. Platinum is the way to go. And if you really want to multiply your wealth, think silver. That said, that's it for now. I'll talk to you guys on Monday. Take care. Bye.